Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Friday, 18th day of June, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of the office, away from your desktop, not to worry. Just point any internet-connected browser to cfrn.net/live, and there you'll find a live real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live each day on our YouTube channel, and it's easy to remember, youtube.com/CFRN. Not only do we stream live, but we archive each and every daily show there. Currently over 1,700 daily broadcasts archived for your viewing and educational pleasure. So with that, let's open with a word of prayer. Heavenly Father, we thank you today for your blessings, for your great love over our lives. We thank you that your favor has no end, but lasts our entire lifetime. Forgive us for sometimes forgetting that you are intimately acquainted with all of our ways, that you know what concerns us, and you cover us as with a shield. We ask for your guidance so that we might walk fully in your blessing and goodness today. We ask that your face would shine on us, that you would open the right doors for our lives and for our loved ones, that you would close the wrong doors and protect us from those we need to walk away from. Establish the work of our hands and bring to fulfillment all that you have given us to do. We pray that you would make our way purposeful and our footsteps firm out of your goodness and love. We pray, God, that you would give us a heart of wisdom to hear your voice and make us strong by your huge favor and grace. In Jesus' name we pray. Amen. Amen. Well, happy Friday, guys.
Amen.
Amen. It's a happy Friday for you, wherever you are. Let me give you the numbers from around the world. These are the cash markets, the indices, as they're called. The Dow is down 394 points, a little over 1%. NASDAQ is down 94 points. S&P 500 is down 37. That's almost 1%. And the Russell 2000 is down 29 points, 1.25%. In the commodity basket, crude oil up 94 cents, trading 71.98 last. Gold down a dime, trading 17.74.70 last. And silver up 22 cents, trading 26.08 last. It's a gain of almost 1%. In the Asian markets at the close, Nikkei dropped 54 points. Shanghai dropped a half a point. The Hang Seng gained 242 points, which is almost 1%. And in the European markets at the close, FTSE down 135 points. The DAX down 279 points. And the CAC down 97 points. So for the FTSE, that's a drop of almost 2%. For the DAX, almost 2%. And for the CAC, 1.5%. That gives us a mixed day in Asia, a red day in the UK, and it's a big red Radio Friday here in the US of A. So with that, we'll go to Michael, get a recap of what happened in the live training room this morning. After that, I'll be back. We'll go over the logic alerts, the concierge trade alerts, all that, and answers to your questions. If you have questions for Michael as he goes through the recap, just type them into the chat box. We're always happy to answer your questions. You just got to type them in.
All right.
It's all yours.
Great. Great. Let me just send this really quick. There. Okay. All right, here we go. Good afternoon, everyone. Today is Friday, the 18th day of June, 2021. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage here at cfrn.net. Scroll down here to where it says free 5-day trial, no credit card required. Click on that. Okay, once you click on that, you'll be brought to this page, eminitrainingschool.com. At eminitrainingschool.com, all that we ask for is your name, your email, and your phone number. You can tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button and be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, we don't know that you took the free trial. So you got to click on that link. All right. Now, the spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 18th day of June, 2021. Today, we made 17 ticks in crude, 27 ticks in gold, and 12 ticks on the ES. Put us at plus 590 on the morning session. Today it took 3 minutes and 1 trade to get to the goal for the day. That point, we're up $100 a contract, and we took a total of 25 trades. So on the month now, we're at $6,152 a contract. That's over 13 trading days, averaging $473 per contract per 2-hour trading day. We've now gotten our goal on 115 out of 116 days so far this year. And that puts us at plus $78,682 a contract. That's over 116 trading days, averaging $678 per contract per 2-hour trading day. Okay? Okay, let's get into what we did and didn't do. Now, we traded all the markets. Gold we traded the most on. ES was actually second today, and then crude. So we'll just start out with the ES and go right to left. Okay, now the ES was getting down below the weekly trading zone. This is the lowest zone of the week. And I was telling the guys this morning that we're not likely to stay below the lowest zone of the week for the rest of the day. And you can see we're back up above it now. But let's get all the way back here to what we did and didn't do with the ES. Now, we started out right in here. This was our first trade of the day. We picked up 8 ticks on this. We missed the follow-up trade right there. We missed a trade there. That one would have been a break even right over here. This one would have been a break even right over here probably. This one would have been a break even or less. Might have stopped out. That one probably would have stopped you out because it didn't go anywhere. This one did actually stop me out, and that put us back to break even on the day on the ES. This one stopped us out too. See, we're in opposite directions here. So stop outs are back to back in opposite directions. Isn't that bad? Stop outs in the same direction. That's a problem. Okay. But anyway, at this point, we were -8. So we went from +8 to -8 on the ES. Then right over here, we picked up 8 ticks again, got back to +8. Then we got down into the zone. We didn't really do much in there. And let me just look at something here. I'm thinking, yeah, that's what I thought. I missed one trade over here where we had +9 ticks, I think, on this one. I didn't mark that one down. But we're at +8, not counting that one. +8. And we missed a trade here. And Coming in here, the cycle was going down too steep. That's why I didn't want to do anything here. Coming in here, we're going down into the zone, so I don't want to do anything there. Then we started to get away from the zone. We had a break-even trade there. Then got really choppy. Back up to the zone, back up to the zone, choppy. Got away from it. We picked up 4 ticks right here, and I said this is where it should be going down to. But it went halfway there, and then came up, tried to hit the zone again, and then during the break, managed to get all the way down there. Okay, so we picked up 4 ticks here, and that put us at plus 12 on the morning session. Now, during the break, it went back up above the weekly trading zone, and it's been vibrating on top of it right here. And you know, it wouldn't surprise me to see it make a big move up from here. If we bounce over here to the 30-minute, big move up would get us all the way up to the BBC up here at 41.90. I wouldn't be shocked to see us get up to 41.90 by the end of the day today. Okay, and that was the ES. We ended up with plus 12. Now, crude oil. We had, on crude, we just had 6 trades. It looks like 1, 2, 3, 4, 5, 6, 7, 8 trades, it looks like. Okay, let me update that later. All right, we missed a trade there. We didn't have a trade there. We picked up 10 ticks on this one. Yeah, we picked up 10 on that one. Then we missed a follow-up trade right there. We picked up 13 on that one to put us at plus 23. We picked up 2 there to put us at plus 25. We had a break even there. Then we stopped out there to put us back down to 17. 1, 2, 3, 4. Break even is 5. Another break even, 6. Another break even, 7. And that was it. So we had 7 trades there. I gotta fix that on the spreadsheet when I get back to it. During the break, we didn't have anything in here. It was just a bunch of garbage right here from the end of the morning session right in here all the way over to here. There was just nothing crude. Okay, so now we'll look at gold. We started out right here in gold on the very first trade on gold. We picked up 4 ticks. Then we picked up 10 more to get us to plus 14. We had a break even. We missed a trade there. We had a break even here, and then we stopped out right there. Put us back down to 6. We missed a trade there that would have been profitable. Picked up 3 ticks here to put us at plus 4 ticks there to put us at plus 13. And we had a missed trade there that would have been profitable. Picked up plus 13. We went to 24. So we had 11 ticks to get us to plus 24. I think I missed that one. This was the 11 ticks to get us to plus 24. And actually, I think I entered them in backwards. This was plus 3, and this was plus 11. So this plus 3 got us to 24, or got us to 27. No, 13, then 11 to 24, then 3 to 27. That's what it was. Okay, and then there was a long here that I missed. I don't know why I didn't mark that. A couple of break-even trades in there. Got really choppy. Another break-even trade. A missed long right here that would have worked out. More choppiness, and that was it. So we ended up with plus 27 on the morning session. Okay. During the break, it was a short here you could have taken. A short here you could have taken. This one would have given profit. This one would have given a little profit. And it's setting up a long right now. That was about it. Okay, and that was gold today. All right, so yeah. If you're gonna read the spreadsheet, you gotta read all the CFTC risk disclosures down at the bottom. Today's the 18th day of June, 2021. Today we made 17 ticks in crude, 27 ticks in gold, and 12 ticks on the ES. Put us at plus 590 on the morning session. Today it took 3 minutes and 1 trade to get to the goal for the day. At that point, we're at $100 a contract, and we took a total of 26 trades today. 26 trades today. So on the month now, we're up $6,152. That's over 13 trading days, averaging $473 per contract per 2-hour trading day. We've gotten our goal in 115 out of 116 days so far this year. That's a pretty significant thing. And not giving it all back on 115 days. We did give it all back a couple days, but then we ended up positive. On the year now, we're at $78,672 a contract. That's over 116 trading days, averaging $678 per contract per 2-hour trading day. Okay. All right. Now, whoa, if you've not taken the free trial with us, oops, hang on a sec. Yeah, if you've not taken the free trial with us, then go to the home page here at cfrn.net. And here on the homepage at cfrn.net, all that we ask for is your, just scroll down here to where it says free 5-day trial, no credit card required. Click on that. It's going to bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. Tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, we don't know that you took the free trial, so make sure you click on that. All right. All right. And that's it, guys. With that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Jake, not Dwayne, if you are ready.
Yes, sir. Recap of the recap.
Today, it took 3 minutes and 1 trade to get to $100 per contract.
Good job.
Yeah.
Okie doke. All right, guys. Here it is. Friday already. And we are wrapping up week 150 of the Logic 247. Logic 247 is our 24/7 around the clock E-mini alert service, which also includes gold, crude, and silver. Occasionally some ag products, occasionally some currencies, but for the most part, S&P, Dow, Russell, NQ, gold, crude, and silver. So far this week, we issued a total of 51 alerts. 9 of them never triggered. Still waiting on 6. 36 actionable alerts, of which 19% have been stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure in a very simple 3-step process that we teach all of our traders. Early on in the week, definitely a bumpy start. That was last Friday. So Monday, at this time, we were sitting with 33% stopped out based on that $300 risk profile. As the week progressed, that number dropped to 29%, then to 23%, then to 22%, and here we sit at 19%. The average over the last 150 weeks has been 20%. We've seen weeks as low as 3 and 4%. We've seen, I think, a few weeks that were over 20%, but on average, 20% of the alerts do not do the next high probability thing. Now, nobody knows what's going to happen next in the market. Of course, most folks try to convince you that they do, but the truth of the matter is, if you read Genesis, God did not give Adam the ability to change the past or know the future. Those two things are inextricably linked for eternity. And so, if you can't know what's going to happen next, what do? Well, with our methodology, our strategy, and our indicators, you can know what the next high probability move is with certainty. And based on 150 weeks and over 7,600 individual alerts, we know on average 20% of the time the market does not do the next high probability thing. We get into a long trade, of course, because there's more buying pressure than selling pressure in the order flow. We get into short trades because there's more selling pressure than buying pressure in the order flow. And about 20% of the time, that pressure flips in the middle of a trade. That's why 20% on average do get stopped out. Now, along with the Logic 247 alerts, oh, and by the way, I think Garrett's going to join us today. It was good to hear John's voice yesterday. Glad he's doing better. And one of our members getting some medical tests today. I just read that in the discussion group, so Keep Joseph in your prayers. Alright, the Logic 247 alerts are different than the concierge trade alerts. The concierge trade alerts don't come out around the clock. They come out once per session, typically shortly after the Globex Open. So today, of course, is the Friday session, but the Friday session began last night, Thursday night at 6 p.m. Eastern. Sunday night, 6 p.m. Eastern, is when the Logic channel opens for business, because that's when the Globex markets open. And the alert channel remains open around the clock from Sunday night at 6 p.m. Eastern to Friday afternoon at 5 p.m. Eastern. However, the concierge alerts are posted as a static report. The numbers are good for the entire session. Best way to handle them, S&P is an example. You go to your chart, you put a line in the sand at 42.24, put another line in the sand at 42.05. Once this report is published, if price starts trending towards 42.24, that's obviously bullish, and so our strategy will look for opportunities to buy the market, buy the dips. If price starts trending down towards 42.05, that's bearish, and so our strategy will look for opportunities to sell the market, sell the rallies. Trading is not easy, but it can be simple. Now let's go to if you want to grab a screenshot of this, go ahead, and we'll walk through each of these markets. And we'll keep an eye out for Garrett. I'm not positive he's coming, but based on the last text I got from him, it looks like he's going to. So let's go to the daily chart of the S&P. Now that window of opportunity that we've been watching for a couple days, of course we filled this one on the way down, on the way back up, and on the way down. This one, got about halfway through it. Buyers came in, drove the market back up above the BBC, right up to the step line, which we expect to be good resistance until proven otherwise, which sent price back down through the daily BBC. The green line, call that the BBC. It stands for Bull Bear Cross. When price is above it, we're bullish, anticipating higher prices. And when price is below it, we're bearish, anticipating lower prices. Now, that's true not just for the daily chart, but also a 1-minute chart, a range chart, a monthly chart, because price flows on a monthly chart the same way it flows on a 1-minute chart. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's been going on since the inception of the markets, and it will continue to go on till the markets cease to exist. Now, there are very few absolutes in the world of trading, but that's one of them. That's the truth about trading. From support to resistance, back to support, back to resistance. Every market, S&P, Dow, Russell, NQ, crude, gold, silver, currencies, ag products, you name it. From support to resistance and back again. It's cycling back and forth. And so when you understand where you're at in that cycle between support and resistance, then of course you know which side of the street your trade should be on, either the long side or the short side. And as I mentioned earlier, 20% of the time, the order flow will flip right in the middle of a trade. Doesn't mean you did anything wrong. Doesn't mean you need to go back to the drawing board. It means you need to do what Michael does in the live training room each day and just look for the next opportunity to present itself. Again, not easy, but it can be simple. So we came down through the window of opportunity. First, we passed through the daily BBC. Price always reverts to the mean. In our case, the mean is green. We came down through the daily BBC. We took out the low of yesterday, 41.83, and we hit the 38% fib retracement of the last leg up. Now, the last leg up is from the low put in on May 13th to the high put in on June 15th. This is the all-time historic intraday high for the S&P based on the September contract. This is the all-time historic closing high. That number 42, 46 and a quarter. On the daily chart, we now have red and falling. On the last pullback, we still had blue and climbing. Blue and climbing is bullish. The official name is the CFMA1 for the red and blue indicator. I refer to it as blue and climbing, red and falling. One is bullish, the other bearish. One is support, the other resistance. However, when blue and climbing gets directly above price, then it becomes potential resistance. It sent price back to the daily BBC support, which sent price up to resistance at the step line, and then down through the daily BBC. We spiked the 38% fib, and we hit this little rectangle I drew in a few days ago. This bullish cross. I explained it the other day, I'll explain it again today. When we have a bullish cross that leads to an extended move, or a bearish cross that leads to an extended move. And the bullish example here, okay, bullish cross, extended move, when price returns to that area, and that's what it is, that's an area where the bullish cross took place, the first move down, we expect that to be potentially good support, and in this case it did do its job. Now looks like the low, if we can get a read on it, get a beat on it, the low 41.61, okay, and we bounced back up to, at the moment, about 41.77. So 41.61, that's about a 16-point bounce at $50 a point. The big question is, where do we close today? Do we close below the daily BBC? The buyers come in as we head into the close and drive us back up above the daily BBC. If we do, that's very bullish, and then we would look for further price appreciation Sunday night when the Globex markets open. If we close below the BBC, as we did on this day here, then we would look for further price movement on the downside. Here's another day where we closed below the BBC, and that led to lower prices. We've not closed, now we've spiked the BBC a couple times, but we've not closed below the BBC since this day, May 19th. So this close below the BBC took us from roughly 41.27 down to 40.20. We got back above the BBC and failed, and that took us back down to a swing low here at 40.46. And then price closed back above the BBC on May 20th, and even though we've spiked it a couple times, we have remained above it till today. Today we are seriously trading below it. Now, if price comes back down to this bullish cross, and that bullish cross does not provide good support as it has done so far, here's the 50% fib of the last leg up, 62% fib of the last leg up, and then here's the 24% fib, the shallowest fib retracement of the entire move up, which began on November 2nd. So key numbers to keep in mind. If we close below this 50% fib at 41.40, then we anticipate a move down to the 62 at roughly 41.10. If that 62% fib does not hold, Then we've got major support at 40.75, 40.45, 40.20, and that low sits right above the 24% fib retracement of the entire move up, which again began on November 2nd. All right, here's the S&P. The vertical line separates yesterday, the Thursday session, from today, the Friday session. The CTA on the long side was 42.24. On the short side, 42.05. So again, these are the lines in the sand that I was speaking of. 42.24, 42.05. Now the weekly trading zones serve as fixed support and resistance for the entire week. We publish the zones every Monday morning, 6:15 a.m. Eastern. For all of our members, we've published the zones since December 14th of 2009. Only 3 things happen at a weekly zone. The most common thing is consolidation, about 75% of the time. Rejection, about 20-25% of the time. The rest of the time is the slice. That's when price just slices through a zone like it's not even there. This isn't a real good example of a slice because we had all this previous consolidation at the zone. Now, those are weekly zones. The CTA, you can think of that if you want as a daily zone. Okay. Once price manages to get below the short side CTA, we anticipate further price movement to the downside. We triggered the CTA 7 a.m. Eastern, and that took us to the weekly trading zone at 41.99/4200, where we consolidated for a little over an hour. Again, that's the most likely thing to happen at a weekly zone. So the zone 41.99/4200, 5-point drop, $50 a point, $250 per contract traded. So when price drops to a zone, we expect support, we expect consolidation. We got both of those, and then price traded below the weekly zone, took out the low of these 2 candles, and took us right down to this week's lowest weekly trading zone for the S&P, 41.69/41.70. The zones themselves were very narrow this week. From the lowest weekly zone on the S&P to the highest weekly zone is only a little over 100 points. Here of late, last couple years, we've seen the zones range as much as 200-300, even more, from the lowest weekly zone in the S&P to the highest. And so we knew we were in for some sideways consolidated trading this week. The Fed announcement on Wednesday kind of broke us out of that sideways consolidation, so we've had some fairly decent moves. This move from zone to zone, 41.99 down to 41.69, that's a 30-point move at $50 a point. It's $1,500 per contract traded. So what's price most likely to do from here? Well, this support here represents potential resistance if price can move that high. If price gets up into this area, and we anticipate this area to be good resistance, we could hit this area, we could spike up, touch the BBC, price always reverts to the mean. If we do find good resistance there, if buyers stay committed, because it takes financial commitment for the markets to rise, all it takes for them to fall is for buyers to stop buying. So if price comes back down to the zone, we expect that to be good support until proven otherwise. We spiked it here, but you can see that This candle is still touching the zone. This candle is still touching the zone. So while we overshot it a little bit, so far it is held. So price continues down. There's a little window of opportunity here from roughly 41.73 now to 41.71. It's a 2-point window of opportunity. You got to work with what the market hands you. Okay. If buyers push us all the way up to the BBC, then of course we could have a much bigger move back down to the zone. And if in fact price comes back to the zone and support does not hold, once we take out these lows, we've got a big window of opportunity here, and this is where our members would go and look at last week's zones and even the previous week's zones, because those are important prices, important areas, and even though they were defined a week or 2 weeks ago or more, they can still hold sway over the market. So from the trigger at 42.05 down to 41.65, that's about a 40-point move at $50 a point, $2,000 per contract traded. That's what the market made available. And it all began right here at this bearish cross. Here's the London Open, little tiny doji on the London Open. And then a down candle, bearish cross, price pulled away from the BBC, price pulled back to physically touch the BBC. And from there, we get a leg, a retracement, a leg, a retracement, which brings us down to that potential window of opportunity, 41.73 down to 41.71. The step line, because it has gotten directly below price, represents potential support. Same is true of red and falling. On a short trade, you want red and falling, but when price crosses over from the left side to the right side, putting red and falling directly below price, now it represents potential support, because it's potential, just like here. This is what it looks like when red and falling becomes blue and climbing. All right, let's go to the Dow. On the short side, the CTA long side was up at 33,877. Again, this separates Thursday from Friday. We triggered at 7 a.m. Eastern candle, the 30-minute candle. And the lowest weekly trading zone for this week on the Dow, 33,730/35. We consolidated for hours. Okay, very quiet, sideways trade. Then we pulled away, and then we pulled back. Down close, a trigger at 6:15, and it took us to an old weekly trading zone down at 33,150. From 600 down to 200, that would be a 400-point move at $5 a point. It's about $2,000 per contract traded. Now, if we get through the step line, 33,230 to 33,210, that's a 20-point move at $5 a point, $100 per contract traded. Now, if price gets through the step line, then there's a high probability that it will continue on down to red and falling, and because it's directly below price, then of course there is the potential for it to be good support. If red and falling does become good support, then we have a potential move on tap back to the VBC. If we take out this low, then that will give us an opportunity on the downside. On the Russell, quiet sideways open, consolidating at the weekly trading zone, 2288/89. 6 a.m. was the trigger on the Russell. So the Russell was moving a little ahead of the S&P and the Dow. 2245/46, that is the lowest weekly trading zone this week for the Russell. Again, these zones are published for our members Monday morning, 6:15 a.m. Eastern, before Wall Street wakes up. And once they're published, they're carved in stone for the entire week. So we consolidated at the zone. That's the most likely thing to happen at a zone. And then we went from zone to zone, from 2288 to 2245. It's roughly 40 points, $50 a point. $2,000 per contract is what the market has made available so far. We've got red and falling directly below price. So we've got two good reasons for support here. Not enough room there to call that a window of opportunity. If we take out these lows, then of course this is a previous weekly zone down at 2208. So there's a lot of opportunity to the downside, but this support has to be broken first, because support takes us to resistance. And when the market finds resistance, it goes looking for support. And support to resistance. So now the market's looking for its next level of support. The most likely spot, of course, would be right here. Price trades below it. And we'll use our methodology, our strategy, and our indicators to look for opportunities to sell the market, short the rallies. Leg and a retracement, a leg and a retracement. So another leg, and then a retracement. If we were to break those lows and then retrace back to this area, that would set the stage for a nice shorting opportunity. On the NQ, short side was 14.053. Now the CTA, just like a weekly trading zone, can act as an iron curtain where price reverses off of it, as it did here, as it did here. Or the gate can swing open and let price pass right through. And price dropped right to the next weekly trading zone below at 14.020/21. So from 53 to 23, that would be a 30-point move at $20 a point, $600 per contract traded. Important prices, important areas are almost always tested on a typical day. Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. So if we get back below the trigger, back below red and falling, and below that swing low, and we've got a window of opportunity right here from roughly 14.040, down to 14. Well, from 40 to 30, that's 10 points. The Dow pays, or the NQ pays, $20 a point. So that would be a $200 per contract move. If it moves the full 20 points, then that becomes a $400 per contract move. Hang on one second. All right. 14.040. 14, possibly 020. Now, we still have more weekly trading zones on the downside. We've got one at 966. So if we take out these lows, looking left, there's no obstacles in our path. And so we would have a bigger window of opportunity from potentially 14,000 down to the zone. In fact, there's an alert in the logic channel to accommodate this if price continues to decline. Okay, crude oil. Now, this is the N contract. We rolled forward to the Q contract. As Michael explained this last night or yesterday that we were going to roll, and I'm sure he explained it this morning in the live training room. The trigger was 70, and the N contract is still tradable today. In the last 30 minutes, 846 contracts have traded. So there's no problem with liquidity still for the July contract. Beginning Sunday night, all alerts, both logic and concierge, will be for the Q contract. So we triggered last night on the short side, and we dropped right to the weekly trading zone from 70.85 to 70.55. It's a 30-point move. It's a $300 per contract move. Price found support at the zone, which is what we anticipate. Price got back above the trigger, came back down to the zone, got back above the trigger, came back down to the zone, got back above the trigger, didn't make it back to the zone. Yeah, it did. Look at that wick there. Made it back to the zone again. However, not all triggers are created equal. On a short trade, you want the support of red and falling. Even though there are triggers here, you'd be shorting right into potential support. And blue and climbing represents potential support. On this last pass, we traded all the way down to 70.30. The next weekly trading zone on the downside we hit yesterday, which is 69.75/69.80. We've triggered on the long side as well, so we had two-sided action on the crude oil on the July contract. This first trigger took us up to the zone overhead, which we expect to be good resistance. When price rallies up to a zone, we expect good resistance. Except when it slices through. Remember, only three things happen: consolidation, rejection, and the slice. When price slices through a zone like it's not even there, when the move runs out of steam, what typically happens is price will return to the zone that it sliced through and then continue in the direction of the slice. So it's possible, if we consolidate sideways here a little bit. Remember, price always reverts to the mean. If we get the BBC here and price here, that would be an exceptional opportunity for a trade on the long side. If price comes back down through that zone, then this area right here where we have the bullish cross, we expect that to be good support until proven otherwise. From 71.45, it's a $550 per contract move from the trigger to the target. On every long trade, the trade to target, the final target, most of the logic alerts have 2, 3, 4 targets. But the final trade to target on every long is the zone above, because we expect it to be resistance. And every short, the final trade to target is the zone below, we expect to be support. And it looks like Garrett is going to join us today. He just sent me a text. And let me go ahead. Now that I've explained the CTA from last night, let me just go ahead and put this on the queued contract so I don't forget it Sunday night. Maybe better put the right year in.
How you doing?
Is that my friend Garrett?
Happy Friday. How are you?
Happy Friday. How are you?
Good, good. Let's see. I got some stuff to share with you today.
Okay. Great. You want me to send you the charts over?
Yeah. Let me see if it's funny. I had a cover letter on this that I actually wanted to show, but by the way, I meant to call you the last time we talked, I think earlier in the week, and I had my nephew in town for a while, and then his father was here. So we had interruptions.
Well,
let's
family
see.
comes first.
Yeah, did that come up?
Yeah, I can see it. Observations, waking up America a little bit at a time.
This one's titled "Market Tops Take a Long Time to Complete," and we got the bull. It's different this time, and the bear. Actually, we've always heard that when we hear it's different this time, like a classic example was 2000. And in 2000 they said, well, it's different this time. It's no longer the industrial age, it's the information age. That's different. It's a new economy. All sorts of reasons why things were different. And yet when the valuations got extreme enough, all of a sudden it wasn't different. And lo and behold, in the hottest market ever, you wind up having an 83.5% correction in 2.5 years. So, so sooner or later it comes around, and we're in a similar time now. I kind of went over that here, and this is kind of funny because I have a friend who's works for a well-known technical analysis company, very well-informed guy, and been around for lots and lots of decades, like us. And he sent me these charts, and they're really compelling. But what he said, as his comment above the charts, first of all, cracked me up. And it's very true, at least until the market tops. But these charts I thought were worth going over because I think they'd be important for your audience and frankly anybody to be aware of. These are just what I consider to be big time charts looking at important things, and let's see what they have to say. Here's the S&P 500 index versus margin debt year-over-year change. Well, just going back in time, here's the top in 2000. Here's where the reading is, the margin debt. Here's the top in 2007. Here's where the reading is and the margin debt. Now, you don't see it at any other time. Not here, not along here. Now it's up here. Boom. So the implication is two things, I think. Number one, there's enormous risk to the downside and limited risk to the upside, probably. And we're probably at or very close to a time period where we have either a market top or the market top. Anyway, the next one, correlation between the growth and value, correlation between growth and value versus the S&P 500. Well, here, again, you go back, in this case, to 1991, and what you're looking at is growth and value, down here, very low correlation to growth and value. So you're getting high prices, but you're not having the growth and value to go along with it. And again, you had a fairly good economy here. But again, the growth and value in terms of price and PE ratios and value was just exorbitant. I'm sorry, the growth was not, but the valuations were. So you're way down here real low. Now this whole time, even here in 2007, which was a major top with even a bigger decline,
Right.
not in the NASDAQ, but in the blue chips was certainly the case, but nothing here. And the reason is that here everybody went into high tech and things that had PE ratios of, infinite numbers. But over here, after they just got wiped out, they went, no, this time we're buying blue chips. We're not buying the NASDAQ. And they didn't. The NASDAQ was down. It was way down, much closer to its lows
And
after
everyone was
losing
screaming
83.
this time. It's different.
Yeah. And so nothing here, no sign, no one of these, no one of these. So that's telling you something. But now over here, it's like, not only, it's even worse. This is saying that this market, without, the extreme PE ratios, well, it certainly got a number of them, but it's seemingly not as much as over here. The value is even worse. And that shouldn't surprise anybody. But what's this chart say? This is a big deal chart, I think, because you're not seeing anything in between. And it's showing you that this is even significantly worse than over here, which was the worst of all time. So that's got to be a big deal chart. And once again, what's the message? Lots of risk, and we're probably at the top. Then we come down to the S&P 500 versus real earnings yield. So interest rates aren't doing anything. This goes all the way back to 87. We see it here, low, there's the top. And that was a 40% decline, by the way. Looks like nothing on the chart. Over here, top in 2000. Top in, this is probably early 2008, actually, where this is happening. And now, again, worse than any of them, and right here. So once again, you're looking at a completely different area. This time it's real earnings yield, and it's saying, hey, this is not a place to be in the market.
Right.
Then we come over and again looking at yield, but now we're looking at real dividend yield. So it's okay, earnings aren't paying much. What are dividends doing? And once again, same picture as you see over here. The dividends are confirming it, and while they're not at the lowest point here, like they were here, they're certainly competing with this low here back in probably 2008. So again, another huge message, like there's no value here. The yield isn't going to help you much if the market gets to a reasonable value. This is Fed assets versus S&P 500 forward PE. So what happens if the Fed actually tapers? So that's the question. Here everything's just kind of gone up. The government, people forget. Gee, look at the government, how generous they're being. They've got this multi-trillion-dollar infrastructure plan that probably doesn't have anything to do with infrastructure and is merely funding a political agenda. But, they'll never tell us that. But, gee, here's all the money you want. Don't worry. Oh, debt. Did we have any debt? Oh, well, don't let that worry you. And by the way, just a reminder, the government doesn't have any money. Governments don't have money. I mean, dictatorship governments do. But they don't have any money. It's our money. So if all of a sudden you're real happy with your government check, one of two things is going on. Either you're paying for it if you work, or if, since most of the people in this country don't work anymore, then the other people who are working are paying for it. It's not coming from the government.
Right.
It's just that you have a government that is not following its oath of office at all anymore, or following the Constitution, or following anything that they're supposed to be doing. You've got an agenda going on here that I try to point out, and everybody sleeps through it, but it's the only thing that'll answer all the questions. I watch these guys on TV every night. Well, I'm trying not to watch them, but my wife will watch them. And I go, why are you watching these people? First of all, they're not telling you the truth. And number two, they're asking questions like, gee, why is this happening? It's like, hello, aren't we all on the same planet here in the United States? And you're asking why this is happening? And you're right. Gee, this doesn't make sense. Gosh, that's true. It doesn't make sense. Why do you think that would be? And it's like, well, they told you 60 years ago. Kennedy tried to tell you they eliminated him. Eisenhower tried to tell you they didn't have to eliminate him. He was out of office. And over 60 years, you still can't get anybody to listen. And now it's happening, just like they told us, and Aldous Huxley in particular told us this is what's going to happen. And then in my prior observations, we went through that entire A to Z thing of the sequence of events that occur, that a guy who died over 200 years ago told us what would happen the last 200 years when he hasn't been around, and he hits the nail on the head with far more accuracy than the best economists of today.
Right.
Why is that? And people go, well, gee, why is that? And I go, well, wake up. Why is it? Is it because when you go through this cycle, they tell you throughout history, but the one thing they do say to their credit is that those people living in the dying empire, in other words, if you're lucky enough to be born into an empire, which is a very lucky thing to be born into, if you're born into the American empire and you're going back 50 years, boy, oh boy, things were pretty good, and particularly going into the 50s and early 60s. Both parties were conservative. The worst thing you really had to worry about in most cases was, gosh, some teenager might peel out around the corner, and maybe the worst of all things would be they might throw empty beer can on your lawn as they drove by, and you think, boy, that was back in the 50s and 60s. Boy, that was a big deal.
Yeah.
Now, now they're just burned down your city. And you go, gee, that's different. Why is that happening? And I go, well, why do you think it's happening? Because you don't have the Constitution doing things anymore. You've evolved or devolved from a republic to a democracy to finally a dictatorship. But all of us now go shake our heads, go, oh, no, I don't think that's what's happening. I go, fine. I said, that's my 2 cents, and that explains everything, by the way. So what's your 2 cents? Oh, well, it's like, okay, well, because these people are going to stay sound asleep, it seems, those people who aren't asleep get to go down with the ship. So anyway, it's certainly something to be aware of. And these charts are in their own way kind of showing this as well. There's all sorts of things, what I meant to say though before, Dwayne, is that history says that if you are in the reigning empire at the time, and of course we are, but it's been dying for 50 years. I mean, we were at our peak in about 1970 vis-a-vis the other major countries on the planet, because it took the next 10 countries combined GDPs to match ours back in 1970. Now, it's just a matter of time before China takes it over. So, and maybe, who knows? Maybe with this pandemic situation, it's close to already happening. But anyway, that's kind of what's going on, and people do not see it in their own. When you're in that situation, when you're in a dying empire, they never see it coming. And when I read that for the first time about, I don't know, at least 4 decades ago, if not more, it struck me, and I thought, well, yeah, that's crazy. I Why would that be? How in the world could you not see it? So, and then for the next 40 years, you watch this unfold right before your eyes, and you see people coming up with every conclusion in the world other than the right one. Even now. I mean, particularly now. Now when it should be obvious, like, hey, these guys are burning down your city. They're tearing down your statues, things that we used to honor as our history. And we're wondering what's going on. And so there's confirmation right there. And it doesn't matter. I mean, this happened in Rome. This happened with the Nazis in Germany. This happened in every empire I can think of when it was dying out. People just don't see it. And here we are living through that right now. So it's kind of interesting. U.S. stock bond correlation. Once again, we get real overdone here. And this, of course, is right in the 1999-2000 time. And although we get close up here, we're not there. But once again, now, we've crossed the line again. So here it is. And I think there's just one more set. Let's see. Is that it? Yeah. Global stock market value relative to GDP. So this is everybody, the whole darn world.
Right.
What's going on here? Well, this says market cap to GDP, 2 standard deviations above the mean. Wow. And by the way, on one of these other ones, we were above by 2 standard deviations. That's an extreme of an extreme. So once again, you look at these charts and you go, boy, this is a big deal. This is the whole world stock market value relative to the world GDP. And it's saying, boy, look at us here. We're way above back here. And look what happened here. Boom. So that's giving a message. These aren't, timing mechanisms, of course, but look at this, U.S. quarterly equity offering. I mean, it almost looks like we've doubled it. And when you look at this says head scratching standard deviations. I mean, you're so far above in standard deviations here, it doesn't even make sense to determine what it is. I mean, look at this. We're skewed to a completely unbelievable degree. Now, my friend, his comment was when he sent these charts. Now, these charts to me are classically meaningful. I mean, this is big picture, big deal stuff. His comment to me, and again, he has a very dry sense of humor, bordering on caustic, but and he understands the value of these charts and what they're saying every bit as much as anybody. But his comment was 3 words: more meaningless, and then it was a 4-letter word starting with S, ending with T.
Got it.
And you think, well, holy smokes, why would somebody say that? I mean, this is not only not meaningless, this is extremely meaningful. But he's absolutely right. And he's right because, hey, if the market doesn't top, and we've been at other points where the market's gone and given where any time in the past 50 years when I had a setup like this, I'd be short. I'd go home over the weekend, never lose an ounce of sleep worrying about it. It's a perfect time to be short. And it either doesn't happen on Monday or on Friday when you're happy to be short. All of a sudden a rally comes out of nowhere for no reason, with no news.
Yeah.
You've seen that.
Yeah. Oh, yeah.
It's like, well, this may happen today. I mean, what is it, 10 o'clock? We got 3 more
Pacific,
hours.
yeah.
This market could be up 300 points before this day's over. I mean, this is so negative today. I wanted to show another chart. I don't think I have it in there, but let me see if I can find it. Oh, yeah, here you go. Let me drag this over. Now, this is a weekly S&P chart, as we see here. We make a higher high. So we draw our trend line in here. Look at this. This is a weekly divergent sell signal. If we close down here, we've got a major weekly divergent sell signal. Look when we had one over here. Again, top, black line turns red, black line turns red right here. When was that? Into the decline? No, it's right at the top, right there. And where's this one? Right at the top, except so far today, we've already fallen. And if we close down here somewhere, we're going to break this lower trend line. We're going to have a legitimate weekly sell signal that's a divergent sell on a Friday. It's the end of the week. So, if we were getting it on Tuesday, even though it's a weekly, since it wasn't Friday, it wouldn't be valid. Today it's valid. Now, like I said, we could end up 300 points today with all of us scratching our head, or at least those of us who've been around for a while scratching our heads going, what the heck is that about? But this is major. This is a major negative.
If you need to get that,
And
you can.
and it's a weekly. Stop.
If you need to get it, you can.
That's okay. Hang on just a sec. I'm sorry.
Yeah, no problem. Now, guys, this is the S&P Cash Index that we're looking at, not the futures.
Okay. Sorry. I'm sorry.
No worries.
Anyway, this is a setup here. Now, I have a friend who does very good GAN work, and he noticed a date coming up on his GAN wheel on Monday that implies that we could certainly have a Friday if this thing were to close down like this. That we could certainly have a Friday-Monday situation that might even imply a mini crash, or who knows, something more than that. We're certainly overdue for it. And his correlation went back 34 years, which was to 1987. And he could take the dates of those and do them backwards and forwards, and then went back 404 months, and using those numbers, and he even got back to 1929. So he had all sorts of correlation. But like my friend said with this 3-word comment, until this actually breaks, we're just whistling Dixie here.
Yeah.
In the past,
that's very
it
true.
would have happened. And the reason that it isn't happening, in my view, is that we have had, in the past, going back, 10 years or so, at least, you didn't want to say things like market manipulation, just because it just didn't sound professional. And gosh, there's no market manipulation. The market's always, had its ups and downs. Well, there is market manipulation. The plunge protection team, the Friends of the Federal Reserve, the things that when you're having a Friday and things are negative and things are going down, and then all of a sudden out of nowhere, this wild rally starts for no reason whatsoever. So yeah, you are having manipulation, and you're having it to a high degree. And some of the things that I brought up, and it's again, why is this happening? And I'm going, well, if you're trying to figure it out, thinking that this is America the beautiful, land of the free, home of the brave, Purple Mountain Majesty and all that stuff, you're probably not going to be able to figure it out. But if you're figuring it out, that you've got a situation where world globalists are following a stated agenda that they were nice enough to tell you about, but nobody tends to pay attention to, maybe that's the answer. Isn't it true that the globalist companies all did very well during the pandemic? And the heart and soul of America, the small businessman, that's what made this country,
Right.
are all getting wiped out.
And that's what's being
And
destroyed.
isn't it interesting, that our government, we the people, isn't it interesting that our government is paying workers to stay home. I saw it today that if you had 2 unemployed workers, that you could have a household earning $100,000 a year. Like what? Excuse me? Both of them aren't working and they're getting $100,000 a year from the government? And you've got a problem with an economy that went down to depression levels because of a pandemic, and you want to get people back to work, but you really don't want to get them back to work? Now, the only possible answer for that to make any sense to anybody who's got 2 working neurons is to come up with what I've been talking about this whole time. There's an agenda going on here. It doesn't have anything to do with America, land of the free and home of the brave. It's got a whole lot to do with exactly the opposite of that. And you're purposely, the people who got hit in this country was the middle class. What makes this country? They've shrunk the middle class to a monumental degree by taking some of the criminals and putting them up into the upper class, and taking those good people that were out there literally being the heart and soul of America, your neighbors, find people with their own little businesses and running them into the ground, keeping them there with a pandemic. And now we're finding out that, oh, these masks don't help? Really? Yeah, oh, they not only do they keep me breathing carbon dioxide when I need oxygen, and that doesn't help my system at all, but they do nothing to stop the the thing from, the actual virus from coming in. You might as well not have it on. But now all of a sudden it's okay to take our mask off because today is significantly different than yesterday was when we had our masks on. It's just like, could you guys insult our intelligence anymore? But the reality is most people's intelligence seemingly isn't being insulted, which is real sad. What happened in the pandemic I was reading in 2018, why did the people die? You know what the reason was attributed to? You know what they were doing then?
What?
They were wearing masks.
Oh yeah. Yeah.
I didn't know that.
I read that. Yeah, no,
I wasn't aware of that. And I thought, well, gosh, anyway, I hope we're waking up. It doesn't look like it, but I think we are. I think we are. But anyway, this chart here to me is a real big deal. And if this was any time other than right now, I'd say we got the highest probability that we had in a long, long time for a mini crash or a Friday, Monday event like we had in 2015 and in 87 and at various other times where you've had a lot of selling come in on a Friday, and then they talk about it over the weekend in the news and they pound it again on Monday and the market finally bottoms Tuesday morning, significantly lower. This would seem to be one of those times. But saying that in watching, the late afternoon rallies on Friday come out of nowhere, because you remember there's an agenda here. I mean, again, if one can pull themselves out of the box and start to think a little bit out of the box, the only thing that answers what's going on is this agenda that's happening. And that agenda needs the stock market to stay up because, well, the stock market isn't going to help the little businessman because his stocks are going to be ruined.
Right.
Those who have stock. It's certainly helping the big rich guys who want to control you and run your life. So they've got a multiple of the money they had before this thing started. And what are they using that for? To change the political agenda of this country. And they're using hopefully not their money. They'll use taxpayers' money and come up with bills that sound really good. Gee, infrastructure, we need that. But sadly, none of the money's going to infrastructure, not much anyhow. But it's all going to the political agenda.
And they control the media, the printing press.
Yeah, and the whole thing. And the sad thing is, what can we, the individual, do about that? Short of, short of acting
Not
on it.
much.
And when they have a lockdown and you can't get together, that of course has kept people that were upset and wanted to, in the old, going back a couple hundred years, people would meet in the town hall and figure out a plan. Well, that's been removed. So anyway, this is a very interesting time. I've got a weekly chart here and not a daily chart, because a weekly chart's a much bigger deal. Have we had divergent sell signals before? Yeah, I mean, you can see them. There's one right there. And where did that happen? Right there, and that's the top. Actually, it's the last time we got a correction. So it ought to happen again. Here's one over here. Where did this happen? Right, let's see, right wherever, about there.
Mm-hmm.
And boom, we get another correction. So at least we got to have some kind of a correction here. But in this crazy market, where what would have been a laydown situation in the past is almost a risky, you're scared to death to do it, because you don't have that government that and again, we could go back to the days of Reagan, and when you look at his cabinet, I mean, I think Reagan was a good guy. My guess is I don't think he would have gotten shot if he wasn't, which is a sad thing to say. But look at his cabinet. His cabinet was filled with globalists, and his vice president was one of the biggest globalists on the planet. So to say that, gosh, it's different today, almost seems to be a little naive. But the reality is that it was different, because even though they were in position and probably after Reagan got shot in power and the beginning of an uninterrupted 35-year period of globalists right on up to 2016, at least the psychology of America was following Reagan, and we thought, and our freedoms then were significantly more than they are now. You used to be able to, you had freedom of speech in 1980.
Mm-hmm.
People could say things. Now, you can't, there's certain things you cannot say. You can say whatever you want about a white person. I mean, publicly, anything else. So you can say horrible things about it. Nobody's going to bother you. And a whole bunch of white people are going to jump up and down and cheer, which is kind of beyond my ability to even understand. So, excuse me, they're talking about, negative things about your race, and some of them are talking about eliminating you, and you're cheering? Are you, is anything working in your head? Anyway, you almost have to laugh, but sadly, there's nothing that's very funny about this. But we've got
the number one indication that you're a racist is to say that you're not a racist.
Yeah, I mean, and isn't it interesting that the people, the obvious largest racists on the planet now are the vocal blacks, not the ones that aren't racist, but the ones that are, and that includes a whole bunch of our athletes. You can take almost all of the basketball players and put them in that category.
There's a
and
book,
a whole lot of the football players.
There's a book that's recommended reading for every sailor in the United States Navy, and it was on Tucker Carlson last night. I don't recall the name of the book, but the quotes read from it were just ridiculous. And there was a congressional hearing of some sorts where this admiral who recommended, that every sailor read this book, he was asked, a paragraph would be read from the book, and then he would be asked, do you believe this? Do you believe this to be true? And he ducked and weaved, and he would never give a straight answer. I don't remember the name of the book, and the name of the guy. He doesn't go by his real name now. Is an Afro-American gentleman, or whatever the politically correct term is these days. I don't even know. But he doesn't go
Why
by his
should
real
there be a
name.
term? You know,
He doesn't go by his real name anymore. He uses his new woke name, his warrior
and he's
name.
did you say he's an admiral?
The guy that recommended reading the book is an admiral. Yes.
Wow.
Let me see.
It's anyway. I'm no longer surprised by anything. But all of this, and we all get so surprised, and I go, why is anybody surprised at this? You remember what made this country great? I mean, I can just say it in one simple phrase: united we stand, divided we fall. Period. Nothing. Don't have to embellish that. Tells you right up front: united we stand, divided we fall. How do you make a country great? You love your country. And if you're lucky enough to have a republic and a Bill of Rights and a Constitution, then you've got reason to love your country. If it's a free country, at least as free as it can get, you've got another reason to love it. And that's what we had. Now we've turned our back on that. How's that worked out for us? Well, everybody hates everybody and the country's on fire. Oh, and by the way, we've got a president who lost the election, and on and on and on. So how's that working?
Yeah.
Is this, there's nothing difficult about this, and there's nothing at all difficult to fix this. You don't have to be even particularly intelligent. You just need to basically have enough sense to get up and put your pants on and feed yourself breakfast. That's about all you need to know to figure this out. There's nothing hard about fixing America. You don't need some great guy.
Go ahead.
You've got a beautiful blueprint on how to do it. How do I know that? Because we've already done it. We went from a nothing fledgling to the greatest country on the planet, where it took 10 combined countries' GDP to match ours. And then guess what happened? And this is 1970. Well, what changed? Well, we created liberals. Why? Well, because you had to have them, because if both parties, which they were conservative, they would never have a chance of this happening. So you had to make one of those parties not conservative. And they did it. And my generation was very helpful in that. We were billed as the great anti-establishment generation, but were we? Not on your life. We were the greatest pro-establishment generation, and we still don't understand that. We're the ones who brought in drugs, both pharmaceutical and recreational, and we brought in the pharmaceutical industry, as well. Didn't know it, but that was another thing that we did. And most of all, we created all these kids were the new liberals. And by the way, they weren't even liberal. I'm a liberal. People go, well, no, you're not a liberal, you're a conservative. I said, those aren't mutually exclusive. I said, we're taught that they're mutually exclusive, but I said, I may be a conservative, but I'm a liberal conservative. They go, well, what does that mean? I said, it means simply that I don't want to create laws to force you to do anything other than follow the law as far as criminality and things like that. I said, if you want to own a gun, I don't care. I don't want you to be, psychologically crazy and own a gun. But other than that, I don't care if you own a gun, if you're a reasonable person, and I don't care if you eat meat, But the quote unquote liberals, the term that we were given, they're not liberal, are they? They don't want you to own a gun. They don't, if they're vegetarians, they don't want you to eat meat, and they want to make a law that you can't. Oh, and by the way, they want to force you into believing that there are 57 sexes. Right? I lose track of I got that from Huckabee, who knows more about it than I do. I was still back on thinking there was 27. I think he said 53 or something the other night. So I've lost count, but I'm so out of it. I don't even know what the third sex is. If they said, well, there's two sexes, what's number 3? I go, I have no idea. I don't know. And 4 or 5 are out of the question for me. But anyway, I just think I'm hoping that this is a special time on the planet, because I know a lot of very long-term cycles have been coming together. Well, one second, I'm sorry. Hello? Hello? Boy, it's one of those obviously marketing calls that's
when you pick it
recorded,
up, it's dead air.
It's recorded, but they send it from your own local
Sure.
Area code, assuming that it's Aunt Matilda or something. Anyway, sorry, but anyway, this is I think this chart that we're looking at there, normally under normal conditions, and boy, I haven't seen normal for a long time, but under normal conditions, this is a real big deal. And I guess we're gonna find out. And yeah, I was gonna say, and Dwayne, you have your own technical stuff that's obviously fabulous. What does your would your information on a weekly chart confirm that at least it looks like something pretty substantial might be on the horizon?
Well, on the daily chart of the S&P futures, we just had a retracement today to the 38% fib retracement of the last leg up. And if we trade lower, in fact, I'll show you.
Oh, this one here, huh?
Well, I'll show you.
Oh, okay.
I'll show you my chart. Hang on.
Yeah, we're coming down to a prior fourth wave low here too.
There we go. You can see my chart now, right?
Mm-hmm.
Yeah, it's the S&P daily futures, not the cash index. That's a new all-time historic intraday high and new all-time historic closing high. And so price always reverts to the mean. I don't have to tell you that. You know that. In our case, the mean is green. And so we look like today we will close below that green line. It's called the BBC, Bull Bear Cross. The last time we closed below it here, we took this drop. The next time we closed below it, we took this drop here. And unless, the cavalry comes rushing into the close today to drive us back up above that green line, then we've got a 50% fib retracement here, a 62 here, and then the entire move up, which began November 2nd, the low was put in October 30th, and the rally began November 2nd of last year. That 24% fib retracement is sitting right here, just above the 4,000 mark. So,
and that takes you down.
A close today.
That's a prior.
Yeah, go ahead.
That's a prior fourth wave low down there. Where were you down? A little over 4,000, 40, 20, something like that?
Yep.
You see, that's a fourth wave low over here, right there. So, and that's a pretty good correction.
Yeah, but
And frankly, if we did get a break like that, you probably ought to, there's a good argument to be made that you could see 3,800 or less on this thing.
Well, the 38% fib of the entire move up is 38.63. And then probably the most compelling would be the 50% fib retracement here, which takes us down around 3,700.
Yeah, and a lot of times you'll have a correction I mean, if there's going to be another move up, and then barring something wild, I think there is a good chance for that. But lots of times your correction comes down to be between the 382 and the 50%, just somewhere in between the two. So
Yeah,
that's,
here's where that rally began, November 2nd. And we have not closed. We closed below the BBC on this day, here and here. But mostly everything has been, to the upside. And so the 62% retracement of the entire move up that began November 2nd, that looks pretty doable. And, this double bottom here, down around 3,200, certainly not out of the question. And if we go to some larger time frame, like a weekly, so here's a weekly futures continuous chart. We had a bullish cross right here on June 12th of last year, and we've had a leg and a retracement, Price always reverts to the mean. Okay. Now on the weekly we closed below the BBC the week February 28th last year, and that took us to this low down at 2174 on the S&P futures. We got back above. We had our bullish cross here on June 12th, and it's again a leg, a retracement, a leg, and a retracement, and then this continued leg. And so if we pull fibs from this low up to the new high here, is 24%. Now this is going all the way back to February, or the low actually put in March. So from March of last year to the most recent high, I mean, that 24% retracement is 3766. And this area here looks to be quite important because of the consolidation. It was a swing high. So this bullish cross is on the way down. That's our major support right below the 62% fib retracement. So am I saying price could drop from 42.67 down to 3,000? It's certainly possible.
interesting.
And on that larger time frame, on that monthly chart that I've shown you before,
your green line's at about 40, 50 or so, something
40,
like
45
that?
right now. Yeah, on the weekly.
Wow. Well, that's, this is going to be very interesting to see, not only on Monday.
Sunday night should be interesting.
Yeah, because, we're due, you used to have these corrections that would last, a number of weeks, even if you were in a bull market. You remember you used to have, 5-6 week corrections that would come in, and they've pretty much eliminated those, and I think for reasons that we discussed. This whole thing is about taking money away from us, removing the middle class, getting rid of the heart and soul of America, the American business owner, and removing individual rights, creating collective rights. And I've said before, there's no such thing as a collective right. A collective right is what a dictatorship sells to the public. Oh, we have collective rights. So what does that mean? That means that we, the government, own everything and allow you to be alive unless you bother us.
Right.
That's what a collective right is. If you want to be honest about it, if you want to, write a book on that and be a college professor and lie to our children, I guess you can tell them a different story. But anyway, well, listen, I better run. appreciate having the chance
Well,
to.
we appreciate having you on. We always do. See on the daily chart of gold here. I mean, this
Oh,
off on
gosh,
gold
yeah,
came out of
gold.
nowhere. We had a bearish cross back on January 15th, and then we put in this double bottom. And we had a bullish cross, and we did not put in a new high. In fact, we did not. Let's see. We failed to make it back up to that trend line right there. And so off this double bottom,
Are you bearish on gold?
we're at the, well, we just bounced off the 62% fib retracement on the daily
Yep.
chart. If we take out the 62% fib retracement, then right here where the bullish cross happened, that's major support for us. So I mean, long term, I'm bullish, you know, on metals, but I mean, you gotta trade what's in front of you. You know, no matter what you think it should be doing, it's what the market is doing that dictates whatever actions that you take. And so, is this a bearish setup? Yeah, it really is. If this support that we're at right now fails, then 1754's potential support, and then after that, support's down at 1736.
You know, I'm glad you mentioned that, Dwayne. Can I steal the charts again for a second?
Yeah, you bet. I'll set them right back.
I'll show you. You reminded me of something I meant to cover.
There you
We think alike. Let's see. Show my screen. That's not what I wanted to show. But look at this. A little bit later in this issue, I go down here and start talking about gold and silver, and it's interesting. In general, investors are either focused on paper assets, stocks, bonds, currencies, etc., or real assets, real estate, precious metals, commodities, etc. Well, paper assets have been the asset of choice for quite some time. Commodities have made substantial moves recently, led by energy, oil and gas, lumber, grains, precious metals, etc. Agricultural commodities fell to make a low in March of 2020. Stocks also made a low at that time, but commodities had been falling since their peak 12 years earlier, and their secondary peak in early 2011. Crude oil and precious metals generally followed this pattern as well. This confirmed that real assets had been declining, while paper assets, financial assets, had been rising. I put my parentheses in the wrong place there, I just noticed. The precious metals had stopped their decline from 2011 and late 2015. They chopped out a bottom over the next 2.5 years and began a sharp rise from August of 2018. This rally peaked almost exactly 2 years later in August of 2020. And here's what it looks like. And then I've had the gold chart. And I thought, look at what's going on in the gold chart here. You've got this pattern here back in the big move in 2011, and you run up to a high, you fall back into the range, come down, go up, come down with a correction here. Now you have a run up here, you mess around here, you come down to this correction here, then you run up and then have a drop down to test those lows. You run up, and in this case, it's even weaker. You break the lows, and then you have this final rally here, at least in this pattern, which is what you saw over here. You've got these two bars that look like railroad tracks, where you run up and close near the high, and then come back here and break down and make your correction. Can I call you back? I'm on an interview here. Okay. Sorry. Anyway,
Yeah, those two
these are
circle
very
patterns
similar.
do look very similar. Yeah.
Yeah, this pattern is actually even weaker than this one, oddly enough. And look at your railroad track here. That's where you get a big run up to suck everybody in. You close near the high, then you open and close down here. Look at the indicator below, though. Look at the pattern on the indicator. It's working its way up. The line starts to flatten here, and that's where we start our look at it here. And now these bars are going down. You close here, come up a little bit, and then roll over, giving a, this would be the setup for a divergent sell signal, but you didn't make a higher high. So it's not a divergent sell signal, it's just saying that it's weak. And look what happens here. Same pattern. You come up, line's flattening, you've made your top, you come down, and now you're rolling it over. So the implication, who knows what's going to happen, but the implication is that we probably go down somewhere near this lower line, which is probably at 1600-ish or better within the next couple of months, month or two. And interestingly, August is a big month for gold historically. I mean,
Right. Gets
guys,
into
years
the
and
wedding season in India. They buy a lot of gold.
yeah, the guys. What happened years and years ago is years and years ago, decades ago, when we were doing a lot in gold, the Swiss guys and other people would say, you sell gold during tax time and buy it in August.
Mm-hmm.
Boy, they're showing 50 Portland Police Department riot squad members resign.
Wow.
50 Portland Police Department riot squad members. Boy, why, look at these people have just taken over a
that
city.
state's about to become something like out of a Mad Max movie.
Can you imagine when you don't have anybody doing anything to, on law and order? And why would that happen? You go, well, gee, there's no reason. It's crazy that they're doing it. I go, no, it isn't. Exactly what's going on. Isn't this about removing capitalism and putting in socialism? I don't care whether you believe that or not. Just let your eyes do your thinking for you. Watch what's going on. You're creating socialism. And these people think, oh, well, socialism is good. I go, really? Why are all these people that are coming across the border running away from it if it's so good? And by the way, that begs the question of, you people who are coming across this border need to wake up, because you're not coming to the land of the free. You're coming to some people here seriously wanting to create socialism.
Yeah.
And using a lot of their big money, way more money than the rest of us have, to do it. What today's action says is that some Portland police officers believe they are above the law. That was a comment from somebody in Portland who wants socialism. But anyhow, well,
Fred
thank
says
you
the
so much.
DA in Portland charged one of the officers with assault during one of the riots, so the entire force resigned.
What they ought to do is probably what they ought to do, if they're the riot squad, is go in and remove them from office and say, no, sorry, we're putting law and order back in this city. Unbelievable, though. And the answer as to why it's happening is so clear. And I marvel at history, because history, long before this even happened, says when this happens in your country, because you are the reigning empire, and it will happen in your country, you'll lose your empire. They tell you exactly how it'll happen. And even though there's different people running the show and doing this has happened exactly as we have been told, and yet we'll argue the point and say, oh, no, I don't think that's happening. And I go, why do you say that? And the answer, of course, is they won't. Their answer is, I don't know, or I don't think so. But the real answer is, well, the people on TV tell me that that's not what's happening. I go, oh, well, make sure to listen to them, because they've been so honest with you all along. And by the way, don't forget to wear that mask.
Yeah.
Anyway,
Yeah, right.
maybe though, now that you don't have to wear the mask, remove it from your mouth and put it over your eyes, and then at least you'll have an excuse. So anyway, I'm hoping that we wake up and decide that and understand that freedom's a very important thing that we're not really given. We're not entitled to freedom. I wish we were, but we're not. And history says you have to fight for it. And I would point out that whether you think so or not, we've lost our freedom. It's not there anymore. And if we want to get it back, we're probably going to have to fight for it. But hopefully that isn't the case. I'm hoping I'm on the divine intervention side. Please.
Amen.
So anyway, well, thank you so much for
Garrett,
letting me,
always a pleasure. Love having you on the show. You're always welcome. Anytime you want to pop on, just let me know.
Yeah, I think we're going to wake up and win this thing, and I'm holding that thought every day. And I think if we can all hold that thought, maybe we'll be able to create it, and the country will wake up and go, hey, what the heck were we thinking? And get back on track, because this country's got lots of good people in it, and they deserve a little better, like they used to have. So anyway, my friend, we'll talk soon.
Okay, Garrett.
And you have a very nice weekend, and the same to all your audience.
Okay. All right. Take care.
Okay.
Okay, guys. Here's the NQ. We're sitting right above the trigger again. Remember, the trigger took us down to the weekly zone. Back up to the VVC, which we expect to be good resistance. Back up to the zone, which we expect to be good resistance. Move down to the step line, which on the way down we expect it to be good support. So far it is. Caught a bounce. If we trade below red and sideways, then we got a window of opportunity here, and if we take out those lows, then we have a window of opportunity right here. There's crude, gold, silver, ran right up to the CTA long side almost, and there's that iron curtain. Okay, expect it to be resistance until, triggered, and on the other side. And so we're approaching a potential double bottom here. Got a bearish cross, got a leg, got a retracement, price inching its way down. Big thing to keep your eye on, of course, is the S&P 500 large cap companies. We're back down to the 38% fib, which is the lowest weekly trading zone that was issued Monday morning to all of our traders. We've been consolidating for hours. We got below it, but of course the candles are still touching the zone, which is 4169/70. That's the lowest weekly zone. And so, we talked earlier about the window of opportunity back down to the zone, which that of course happened. If we take out these lows, this is support, and the market finds support, it goes looking for resistance, and when it finds resistance, it goes looking for support. And we've got a doji on the 30-minute chart right now forming right at the weekly trading zone. So big picture, major support right at this bullish cross on the daily. Okay. Low of the session so far. Let me put it back on the U contract. There we go. So this 38% fib, as you can see, these highs right across here. That's an important price, important area acting as resistance, then becoming support, then becoming support again. If we take out the low of today, then the next support area is the low of June 3rd, 41.55 half. If we take that out, if we trade below that bullish cross, here's the 50, the 62, and of course down here the 24% fib of the entire move up. And that does it. Good word for the day. Yesterday we talked about not listening to the enemy. When he knocks on your door, don't answer. Today we'll talk about harmony at home. Ephesians 4:2. Patiently put up with each other and love each other. Without harmony on the home front, all your successes can feel empty. Anytime you find it easier to talk to outsiders than to your own family, something's broken and urgently needs fixing. God designed your family to be a support system and a safety net to catch you when you fall. And His Word gives us the prescription for creating harmony at home. Always be humble and gentle, patiently put up with each other, and love each other. Try your best to let God's Spirit keep your hearts united. Do this by living at peace. Ephesians 4:2 and 3. There's 4 important words in this scripture: humble, gentle, patiently, and united. Without those essential ingredients, it won't work. Humble, gentle, patiently, and united. So, start praying for your children instead of just laying down rules that create distance when you don't see eye to eye. You won't always agree, but you can learn to value, love, and respect each other. Every family has its ups and downs, and every family tree has a few nuts. But if you bail out when things get tough, you'll miss the harvest you could have reaped by hanging on. For example, sometimes the child that ends up blessing you the most is the one who didn't necessarily agree with your ideas or embrace your values or even marry the person you thought they should have. Yes, it's upsetting, but in the long run, none of that matters because family is a lifelong investment. Some of those who opt for divorce end up wishing they had hung on a little longer and had loved a little bit more. Make sure you're not one of them. That's our good word for the day. Hope you have a great weekend. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, Call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.